Hello, everybody. Welcome back to a real baby powder report. This is Julian reporting in from Bangkok. I'm back. I have brought the plague from Vietnam back here, so I'm a little bit sick. You might notice my voice is a bit different, or maybe you haven't heard it in so long that you forget. But I actually think I'm gonna. Oh, sorry. Wow, I haven't sneezed. Oh, wow. Great way to start the show. I haven't sneezed in like probably over a day. And then as soon as we start the stream, I start sneezing. That's that's how lucky I am. Okay, so I think we're gonna shrink me because I don't think you need to see my face with being a bit sick. Vietnam was great, by the way, except for getting extremely sunburned at one point because I forgot. I put sunburn everywhere except the top of my legs, and I ended up getting sunburned. And then 2 days later, I got sick, and I've been like sick basically for 10 days now. The past 5, it's been I can do everything. I'm going to the gym, all that stuff, but I still am like very congested. You can probably hear it in my voice. So not fun. Not sure what's going on, but the market never stops, so have to keep going. Hold on, sorry. Oh my god. All right, 1 second. This is such a horrible start. Let me shrink myself so you don't have to see me sneezing anymore. I might even have to mute myself at one point. So, and you don't need to see this background. Let's get rid of that. And let's look at what you actually care about, which is the market. But first let's look at actually the TRI dashboard. I wanted to show you guys the dashboard because we had a signal fire today. We're not going to be talking about the signals too much in the future because it is a feature that people have to pay for. So I don't think it's exactly fair to just give it away for free all the time. But I think I wanted to point out that the S&P has crossed bearish. So something to keep in mind that there is a bearish cross signal that's just fired. Last time we got a bear cross was a false one on March 9th. The major one was back in February. We haven't had one like this where it really kind of emmed out and crossed over. This is the first time in 2 or 3 months that we've had this kind of cross. So something to really pay attention to. I don't know why the rest of the stuff is taking forever to load. Let's go back. Let's go to my dashboard overview where I have just the S&P and the crypto. Crypto has been just sitting bearish for a while now while it continues to climb higher. So here's the S&P. You can see a big view cross, right? Confirmed today. And crypto's just been sitting bearish, just sitting down here. It's not as clear of a signal as the S&P is giving. Actually, Bitcoin is moving higher, and we're going to talk about my viewpoint on that. Slow is still pointing up, maybe a weak cross. Josh is saying maybe it's a weak cross. Yeah, I mean, I think we'll get into it when I look at the market, but I feel like this is a pretty big deal, so I wanted to point it out. We had the Forex, so we go to Forex Factory, right? I always talk about Forex Factory. You should try Vietnamese bomb. Well, too bad I'm not in Vietnam anymore. I should have gotten it while I was there. I don't have any. So the core PPI came in at -0.1. The month over month was -0.5. That explains why the market's going up because it's saying, okay, inflation's coming way down. But employment is ticking up, which means that basically employment is coming down, but the Fed over tightened at this point, and now employment's going up. Which usually leads to then the market rolling over. Normally, the market doesn't start to roll over until employment claims start to climb. So everything that's happening makes sense. And the next thing that should happen is the market should start to roll over, and then the Fed should start to lower rates. The market should keep falling while the Fed is actually lowering rates, and then eventually it'll bottom, and then we get our reverse and our rally. Let's look at what it's actually telling us. Maybe before we do, we'll look at the options market really quick. So max pain going into the close tomorrow is 410. Where are we right now? 410 is 4,100. And the market is right now at 4,127. And if we go back here, right? So the calls are at 4,112. So we don't want to, there are a lot of calls at 4,120 on the SPX, 4,112 on the SPY. The market makers do not want to see the market closing over 412 on the SPY, which is 4120 on the SPX. So something to keep in mind. Right now, we're actually above it. Well, let's go look at the charts and see where do I think the market's going to go going into Friday, and then where do I think it's going to go for the rest of the week. Okay, so let's go to a daily chart first. Maybe let's start at a weekly. I always like to start in these higher time frames, right? I'm going to get rid of this and hide it because let's make this just a little bit clearer for you guys. Current interval. Oh, no. I want to... Why is it giving me these weird options? Settings, visibility. I don't want it on the weekly. Okay. Great. I'm going to get rid of this. So you can see the market's basically just been ranging. We're at the same levels we were at back in May. We've done nothing. I mean, it's April, May. We're almost back at May. And we've done nothing for a whole year except oscillate up and down and confuse the shit out of retail probably. And make a lot of people lose a lot of money while passive traders have probably made nothing. You can see we have this downtrend line we're sitting below, essentially right here, that we're rejecting off of. So this is a line that you want to watch right here. And on the upside, we had this one, which was broken. So then all we have left is this, kind of like that. And that's kind of your consolidation range that we're in. The weekly is positive, but not above my VIP line. So technically still a bit bearish. I don't consider it bullish until it's above this VIP line, which sits at 58.5, 58.75. Okay, so that's weekly. You can't really draw many conclusions from that other than the market's basically stagnating. When the weekly is very close to the VIP line, for me on RSI, that means that the market is in a point of just simply oscillation, indecision, and it doesn't know which direction to go. All right, 3-day. Sorry guys, I'm like sniffling here. I just don't want to stop in the middle of the stream because we only have like 30 minutes or so. I don't want to get up, go get a tissue, and come back. 3-day, we are also stagnating. So again, right, smack in the center. Let's go to the daily. Daily is slightly bullish, but it looks like it's getting tired of this rally. We've been essentially bullish since March 23rd, and we're all the way in April. It's been almost a month of bullishness now. It's looking like it's getting a little bit tired, which would line up with what the dashboard is telling us. Let's see. Let's fix the RSI here. RSI broke down here, right? This is your breakdown point. But normally when RSI breaks down like this, price breaks down. But what happened was we haven't gotten almost any breakdown. It's just been sitting up here. And it's actually rallying today, and that's probably on the claims coming up. All right, I'm sorry, guys. I got to get a tissue. 30 seconds. Okay, back. I'm here. I didn't die. Thank you, Josh. Okay, let's get back to the market. I feel much better now. So daily chart, you can see that we're bouncing up against this trend line. Stochastic RSI is slowly rolling over. I usually don't have stochastic RSI on my chart, but with the amount of indecision in the market, I feel like adding this extra indicator gives me just a little bit clearer picture of what is going on with the RSI, because I'm just not getting clear signals lately. It's a really indecisive market, extremely difficult to trade. I think Brian pointed that out yesterday. And that's for a good reason, because it's PVP right now. We have high rates by, historical 21st century standards. If we go into the 20th century, they're actually not that high compared to, the average rates. But for 21st century standards, we have pretty high rates. So the market is not able to go up on essentially free money. So it has to get money from somewhere. And that means the market is more difficult to trade, because it's essentially super PvP mode, if that makes any sense. The market is always PvP mode, but this is like super PvP. So it's harder to trade than it usually is. Okay, so we had a breakdown. Here's the 8-hour chart. The 8-hour chart is more clear. this is your breakdown right here. Initial breakdown, retest, final retest, and rejection right here. Now, after this, normally the market would just decline like this. Doop, like that. But we didn't get that because I think it's because CPI came in so low and PPI as well. The market has an excuse to rally again and grab that liquidity. I think what the market is doing is it's just grabbing liquidity here, here, here. We've spent quite a long time basically distributing. I do think we are distributing. There was accumulation down here at 3,500, and now we spent this entire range just distributing. Accumulate, distribute, accumulate, distribute. So we spent how much? What was it? March 9th to March 20th accumulating right here. Rally for a very short period of time, right? Just like almost a week and a half. And now we're spending this time from April 3rd to the 13th distributing. And that's all the market's been doing. Accumulate, distribute, and not really going anywhere. But somebody's making money. Probably big firms and anyone that is trading this market well, that has a lot of experience, which is not many people. But there are people out there that are doing very well. So this is our uptrend channel we're basically in at this point. I am leaning bearish. As you guys know, I am a little bit permeable. Trying to break that, but I am a little bit permeable just because of the conditions that we're seeing right now, where things just don't look great from a fundamental perspective. I mean, yes, inflation is coming down, which is great, but rates are still high, and now unemployment is ticking up, which is historically always a bad sign for the markets. Okay, so let's go to a 4-hour. So we have this tick up, and as long as we're below this trend line, I'm bearish. I'm leaning bearish. 1 hour. Yeah, so here's your big one rebound on the 1 hour. Let's see, 15-minute. 15-minute has a 9 that printed. Normally after a 9 you'll get a reversal, but stochastic RSI you can see is very strong. You can't really short until it rolls over here. 15-minute is starting to roll over a bit, but the problem is that all of these, you see on my right hand side, this RSI thing I have for every different time frame, it's from the 5-minute all the way to the weekly. Everything is green. When that's the case, you will do better going long than you will going short. If you're shorting, you're essentially going against the trend. The trend right now is to the upside, but I don't like how the weekly and the 3-day look on these higher time frames from a RSI midpoint perspective. I understand that the indicator over here, which has disappeared now, now it's back, it is essentially saying the trend is up, but what I'm seeing is that we are at a midpoint consolidation indecision area. But right now on the lower time frames, I don't really have a trade. RSI is kind of all over the place. No clear signals. I think, again, this is a very difficult market to trade. I'm watching the US dollar. I think that's a big one. We're at essentially the line in the sand here of support. If this breaks, then it's game over for US dollar. And I think we're going to head down to new lows. There's basically nothing, right? It's just open air all the way down to 98. This 98 to 96 level. And we do have a ABCD. Like if we measure from the highs up here, we're going to be a bit conservative. I'm going to take it from these highs instead of the ultra mint high. Take that and we put it here. That points to 92 to 93. The US dollar can head to, which is extremely bullish for gold, and basically everything valued in US dollars, which would, be actually a great max pain move, because I think there's a lot of people that are not in the market right now, that are just holding their money in cash, waiting for lower prices, and they have a treasury bonds, things like that they're getting 3, 4, 5% on. But what if it's a big scam? Like US dollar declines massively, which pumps everything else, and then anyone that's holding dollars actually loses. It's like, you got scammed because you were holding stocks, then you got out of the stocks, you moved everything into dollars. Now you got scammed on the dollar side, And then eventually, by the time you're done being scammed on the dollar side, you move back into the market, and then the market tops and screws you again. Like that's what it feels like. That's what it feels like, the path we're kind of going down, where you, regardless of where you are, you're probably, if you're trying to move around and trade, you're going to get screwed. That's at least what it kind of feels like to me. Okay, so let's go to like a weekly chart. Weekly DXY chart looks very bearish. Doesn't look good at all. 3-day also. But like I said, line in the sand, we do have a 9 here on Tom the Mark. If it can bounce from here, we could get a nice rally. I just don't see what the catalyst would be. And but it is extremely oversold. Like, all these time frames are oversold, but the market can often stay oversold longer than you can stay solvent. But I do think this TD9 is a big deal, and the fact that the daily hasn't broken down yet is a sign that possibly this can be the line in the sand where we can bounce. I just have to see. We also have a 9 on the 4-hour that came in, but RSI looks absolutely terrible. Really, really terrible. I couldn't take a long on this. I would really have to see this W out on a 4-hour, and then I can consider it. But right now, this is like straight down. There's nothing positive about this at all. And that's the biggest concern. I would be concerned if I were holding a lot of US dollars. And I mean, if you're in the US and you use dollars, it's fine. But if you, yes, that's true, Matador, BFRN at 100, I agree. If you are in another country and you hold dollars, but you transact in the other country's currency, it's a little bit annoying. So for me, like in Thailand, right, maybe the price of a foot massage is going to double. Somebody made a joke about that in our chat, because I like to go get foot massages. And right now a foot massage is like $8 to $10 with a tip. Maybe it doubles to like $20. That would suck. That would suck if like the US dollar really declined and like Thai baht went up. That's something that could potentially happen. Obviously, it's probably not going to go up 100% against the dollar, but even 30-40%, that's big. That's a big effect. Big daily tail in January. Yeah, so what I'm talking about is this January. So that was tagged, and we're essentially bouncing from that level now that it was tagged. Yeah, weekly. Yeah, I know. Here it is. So we'll see what happens if we get a bounce from here, or if we break through. That's the biggest concern. I think there is a bit of resistance all the way down to about 100, BFRN number and everything. And then we've got right here, right, 99. That's a big level as well. So something to keep an eye on. Makes sense that gold is pumping here, right? So gold is taking off. If we go to a 3-day chart, right, weekly, gold looks super bullish on a weekly chart. I just don't see any stopping here. It recently broke. It didn't break the highs yet. The old high that it tagged back in March was 2070. It didn't break that yet. We went to 2045 or so. 3-day chart does have a 9 that came in. So basically the opposite of what's going on with DXY, right? So DXY has a 9 on the 3-day as well. Kind of funny, that inverse correlation. But if we go to a daily, you can see it's just the RSI is simply embedded bullishly. Shorting this is definitely not a great idea. You're asking for trouble if you short gold here. On the higher time frames, it just doesn't look great. We could get a pullback. We did come to the top of my channel range. So this is the kind of the channel I drew. And this is the top of the range. We tagged it, and then you can see we reversed. The question is, do we reverse further before we bounce higher again, or do we bounce higher from here? And right now on a 15-minute chart, it looks like we're just going to consolidate, and then we can move up. And eventually we're going to break through this channel and just take off. Let me go to a 15-minute here. Let's see if I can gain any further information. Yeah, nothing really big. I mean, we can draw the trend line from here and then call it a downtrend. But I'm not a big fan of shorting this. I would rather wait for a pullback and then get long, simply because the 3-day, weekly, and daily are so bullish. So on gold, I would be careful. I would be careful shorting. I would only consider longs. Wait for a pullback. and enter longs based on that pullback. That's the only thing I could say with that. And I think, you know, drawing this trend channel really can help. It looks like it's been well respected. So you can look for pullbacks to 2030 and also pullbacks to 2024. Maybe it makes sense if they roll over here, bounce off this trend line, 50 MA, and then roll down one more to take out, just push through the trend line, take out the lows, and then head higher. Just grab the liquidity right down here at 2025. I think that could work as a long spot, and then you can ride it all the way up, and maybe it does something like this, and eventually get to 2060, or we even push through and head higher. But I definitely wouldn't be shorting this. I think you need to be, it has to be a little bit crazy to do that. Okay, so that's gold. I think we can look at, how far are we into the show right now? 20 minutes. Okay, so I think what we'll do is, you know, there's only about 27 people watching. Well, first of all, please like and subscribe. Helps us a lot. Thank you very much. Second, I think we're going to look at Bitcoin because everybody's, you know, crypto is the big thing. So we'll look at Bitcoin and see where we're going. And then I think we'll go to the after party and we'll do the rest of the show there, where I've got a lot of individual crypto coins that I want to look at that I've recently taken longs on. I posted about them in my trading room on the site, but maybe it's better if we go through them live to give you guys a little bit more information. Okay, so weekly chart on Bitcoin, extremely bullish, very, very bullish chart. I don't see any stopping here for Bitcoin. We are long at TRI. I actually exited, so I longed here about 23, 24. I thought that was a pretty safe long that we took. And then I exited our longs around 28,000 area. I did it over a couple days. And then on the daily chart, well, actually it's a 12-hour, I had an alert set for a break on this RSI, because the weekly, when the weekly is, what normally happens with RSI is when the weekly is in a higher time frame, clear bull, the lower time frames then have a divergent pullback where they just pull back, but price really doesn't pull back. And once RSI breaks through that kind of, you can see how the daily slowly broke down and then rolled over through the trend line, and then price made a new high. So when you have a higher time frame that's extremely bullish, the lower time frame does something like this, and you just wait for the crossover of your trend line, and then you enter along on that signal, and normally it's a very successful trade. So that's exactly what I did. I exited most of our Bitcoin just in case price rolled over. When it became clear it wasn't going to roll over, you can see right here on the 12-hour, we broke out above the downtrend. We had this little W here, and I entered longs here, 28,300 to get back in on the long side. And now I'm still holding those longs. We did have a 9 that came in on the 12-hour, which has caused price to pause, but it's just so bullish on the daily, 3-day, and weekly that I don't even want to close the longs yet. I think this could just be a little bit more of a pullback, and then we could push higher. I mean, if you're trading on leverage or margin and you care about these small moves, then it's a big deal. But for me, this doesn't get, none of this, like this scenario doesn't get validated until we go back below like 29,000. So just something to keep in mind that I'm watching. I think Bitcoin still looks pretty good. Would I buy up here? No. I do think it's possible we can get a move like this, where it does something like this, and then we push like that. So something to just keep in mind. I don't think it's a good idea to buy up here. I think you would have had to have bought down here before the move took off. But now that it has, I don't have any reason to sell just yet. Like on this daily, it still looks pretty good to me. 12-hour, 8-hour. There's no breakdown just yet. The 4-hour does have divergence. I don't like what I'm seeing on the 4-hour. Yeah, I would, if you have like leverage longs, you might want to take a bit of profit up here. It's not a terrible idea, because you did get a nice rally push above, and now we could get a pullback. Nice opportunity to exit. But if you're in like spot holdings, I don't see any reason to take profits just yet. I would continue holding, and we could possibly make further highs here. You just see one thing. Yeah, so this is still this is a decent target right here. So we hit the 2.618 was here, and then 32,700 is your 4.669 level. That's not a bad level to target. We could even extend the range to from here to here, and then you go all the way up to 34. My target for a while has been this 35,000 area. That's a 50% retracement of the top to bottom move. So that's kind of like almost a BFRN in a way. I wouldn't be totally surprised if price went up there. We also have an ABCD we can draw here, and that also brings us up to that 32,000 area. So 32 to 35,000 are areas where you can consider exiting. I think that would kind of complete the trade. Things are getting pretty overbought on the weekly, daily, 4 hour, any higher time frame chart. Things are getting very overbought. So that's also something to keep in mind. I just wanted to detail that trade that we went through with Bitcoin and what I do think is coming next. And I wish I could say you could short it here and guaranteed profit, but it's tough because the higher time frames are so bullish. It really is. You see what they're doing. I mean, if you follow people on crypto Twitter, most of them, what they're doing is they're long spot, and then they just keep shorting the highs. They just keep shorting to hedge their longs just in case price rolls over, because it's not clear, is it going to roll over? Because so many divergences. What's happening is Bitcoin keeps creating divergences on the lower time frames, making it look like it could possibly roll over any moment. And then what it does is it doesn't ever roll over, and then it just moves higher. And then the CT people keep getting, basically stopped out. Occasionally they flip long, but a lot of times it seems like they keep hedging short, and I understand why they're doing that. So hopefully, that explanation made sense. I know I don't have like an exact perfect trade, but there are some altcoins that are looking quite juicy that I will talk about in the after party, and hopefully can answer some questions that you guys have. Yeah, I think that's it. Please like and subscribe, and I will, if I don't see you on the site, I'll see you next Thursday. All right. Thank you, guys.